Thank you, Mike. And how exciting is it that we get to be here face to face? And you can hear that excitement reflected in all of the chatter and all of the breaks. It's wonderful to be here. That really is the silver lining of the pandemic, that new appreciation of that person-to-person connection. And another exciting thing, the borders are open, so we can welcome our international visitors to come and bring their thought leadership, bring their global lens to us. So it's not only a push presentation, but you have the opportunity to connect with them in the breaks and ask your questions. So I'd encourage you to do that. To that end, I would like now to introduce Aman Cheema. Aman's our Senior Vice President and Global General Manager of Global Real-Time Payments at FIS. And he'll be talking about the future of payments infrastructure. As Senior Vice President within FIS's global real-time payments business, Aman leads the corporate strategy efforts on global real-time payments. And in addition, he's also the General Manager for the recently formed Central Infrastructure Business Unit called Real-Time Central. Previously, Aman ran the Enterprise Strategy and Innovation function for FIS, and that was in the international banking and payments business. Prior to FIS, Aman worked at Accenture, Lloyds Bank and Capco. He's held a variety of strategic leadership positions that intersected across various financial services segments, functional domains and fintech. In today's session, Aman will explore how each industrial revolution has been underpinned by technology changes and innovation. In the digital era, where we are now experiencing all too fast in financial services, what does that mean for financial services and payments infrastructure? Please join me in welcoming Aman.
Thank you, Felicity. Thank you, Mike. And thank you all for having me here today. Kia ora. Hopefully I'm saying that right. Forgive me if I'm saying it wrong. I just wanted to express the invitation to come here today. Beautiful country, amazing city, and very passionate people on payments. So I really do want to express the thank you for having us here today. Just a little bit about me a bit more. So people say, well, yeah, you're in payments, and Felicity went through my bio, and it's all very interesting. But really, what makes me tick is kind of like this quote kind of sums me up. I'm all about curiosity. I don't really know about payments that much. I don't really know about financial services that much. But what I am, I'm super curious. And payments is actually one of those topics you can feed your curiosity non-stop. So I'm still here. Payments is still making me curious, and I think it will make me curious forever. Okay, so I'm going to talk about the future of payments infrastructure and what does it mean, what does it look like, and I really wanted to give an answer, and I will try and give an answer, but before I get to the punchline, just a bit of context setting. So just looking back, and it's kind of introduced today, we've accumulated a lot of knowledge over time. We have a lot of knowledge today. How do we use that to create the future? So just taking a step back, we are now in this fourth industrial revolution. And in the 19th century, we used water and steam to modernize production, to fuel manufacturing and production goods and services. And with electricity coming along, we can now harness the power of electricity, and more importantly, transfer electricity to speed up our production of goods and services. Fast forward into the latter half of the 20th century, and now we're using computers to further enhance the production of goods and services, and better quality goods, better quality services, etc. But as we move out of the third industrial revolution, and I really believe we have moved out of the third, we're now in this fourth industrial revolution of mass digital revolution. The characteristics of what makes us think we moved out of the third and the fourth, and there's a few characteristics that I always home in on, and it's one is around velocity. We are inventing and innovating a lot quicker than we have in any other industrial age. And the invention and the innovation that's happening, the scope of it isn't just to one industry, it isn't just to one sector, and it isn't just to one geography. The scope and impact of that invention and innovation is worldwide across heavy industries. So everything getting disrupted. And the third thing, and this is the most important thing, the invention and innovation that's occurring, it isn't just hitting one part of an ecosystem or an industry. It is hitting every single part of the ecosystem. And so when you put all these things together, you think, yeah, we have moved out of the third and we're now into the fourth. It's not just a prolongation of the third, we're in the fourth. So just a bit of context setting. There's a lot of experience we have as a humankind in getting to where we are now. We need to pick on that and see what do we do with that. And dare I say that this age that we're in now is probably the most exciting age for us as humankind, and see what we can do with it and where we go. Equally, what don't we do with it? And choices and leadership is for us to drive that forward. So, put it in the context of payments, our favorite topic. Really simplifying payments down, and payments is very complex. We make it complex sometimes, more complex than it needs to be. But in the most simplest form, payments is for me, and the way I explain to my kids when they say, "What do you do, Dad?" I talk about payments. So payments is, it's the storage of value and the transfer of value. So if you look at how the storage of value and transfer has evolved over time, go back to 6000 BC, where the storage of value was in physical commodities, chicken, corn, etc., and you would trade corn, and that'd be the storage, and you would trade corn, transfer value that way. And we found gold, and we use gold to be the store of value and also the transfer value. And then precious metals came along with gold, and to be the mechanism for storage and transfer value. And then paper came along, right? And then we use paper to say this is linked to, pegged to a precious metal, and that become the transfer of value. And then where we are now, roughly where we have multitude of mechanisms to effectively to transfer value. And so what's consistent in over these time periods is we have always found ways to increase efficiency of the storage of value, increase efficiency of how we transfer value, and made it easier for us to do trade and to do commerce. And now we're in this world of all things crypto, and the lines start to get a bit blurred of what is the actual store and what is actually transfer of value. So, but better context setting. So, kind of, looking back, we've got this knowledge of before. So, where are we today? And I think CIOs, CTOs of organizations probably recognize this, a diagram like this very well. Today we have many payment types, and in some markets it's some of these, some markets it's all of these, and some markets it's some of these, and some variations of these. But it's got many payment types. Each of those payment types have got their own applications, business applications, and they've all got their own hardware that they sit on. And most of these applications, they need to do what they need to do. They need to manage ATMs, and they need to manage cash withdrawals. They need to process a check and get a check and process it, etc. It gets quite complex, right? I mean, most CTOs say, my cost is really high and my systems are old and I can't change it, and the business wants to do this, I can't change my systems. Regulator comes in and says, well, you need to show me stability and resilience. If system X goes down, how quick can you pull it up? So it's a very complex setup today, and I don't think there's a bank of any size and a CTO or a CIO or even on the business side to say it's a pretty complex setup today. And that's just on the bank's side, right? And then you got the central infrastructure, the central bank or clearing operator who's providing a public good, a public service. So these payments can be settled and securely and safely, and they operate with a level of efficiency as well. So it's a pretty complex setup. Then the question is, well, why do we need to change? Right? it works, application works most of the time, and systems work most of the time. We can change it. Let's always change the bank budgets. We can change it if the needs change. Why do we need to do anything more? And it's kind of like the theme of pretty much this conference, right? You know, we are where we are. There's an opportunity presenting to us. Do we need to go for the opportunity, or can we just kind of suffice with what we have today? And there we talk about, well, what's driving the change? And these kind of like, you can look at these drivers for change, kind of be consistent throughout time, right? Go for the history of where we got to, where we started and where we got to today. But some context behind some of these drivers and what it means today in certain markets around the world, and you probably see a lot of this in New Zealand. Take the first one, customer expectations. You know, consumers typically want instant gratification, they want instant service, they want real-time service, whether it's with buying goods and services online or running their life in general. Everything's got to be quicker, everything's got to be faster. So there's a customer expectation on the consumer side, but also on businesses and small businesses as well. They want to be a small business who wants to get up and running with a new offering, want to be able to launch and take payments within hours and use 4 lines of code to do so. They don't want to hire an IT shop. They don't want the complexity around that. So customer expectations are rapidly changing and dare I say, operating at a pace that's far greater than the industry is moving at. Technology, I'll pick on that one next. If central banks and central infrastructure who I talk to, they're my customer segment, and I speak to most central banks and clearing operators around the world today around the future of infrastructure for various nations. I think the technology one is quite interesting because I think go back 5-10 years ago, I think the choices of technology and what you could do with technology, I would say, was quite limited, right? And if you're building something 10 years ago, 5 years ago, the chances are that you probably have to update it or rebuild it in 10, 15 years. With the technologies available today and the skill sets and talent that we have today, gone are the days of long-winded, multi-year complex programs for central infrastructure. I believe, or we see, gone are the days that have to be very complex budgets and high-risk budgets, and most big programs, before they start, they're already predicted to fail. But the technology we have today, available today, you can spin up new applications, new services, you can expand services in multiple countries, at a click of a button. So there's no excuses around technology to enable a country vision. Regulatory change in information security. Here we're seeing regulators and central banks doing what they need to do to make sure there's an effective and efficient system within a nation, making sure it's safe, it's secure, it's resilient and stable. Those things aren't going to go anywhere, right? I think what we've heard today and what's going on in New Zealand with the resiliency work that a lot of banks had to do recently, that isn't going to go away. So that has to be factored into the infrastructure of the future. And the last one is kind of like my favorite one, is competition. And traditionally, when we think about competition, it's competition between banks. You know, what's my proposition versus your proposition? How are you going to grow with your customer base and my customer base? What's your price versus my price? And that's typically been the narrative around competition. But where we are now in this fourth industrial revolution, I think competition, particularly in payments, takes a different conversation. And the conversation is around, yes, you still have the banks needed to compete with each other. That's very good. But in payments need to compete with each other. Customers want choice. We've heard this consistently. I want a choice. Do I pay with my card, debit, credit? Shall I pay with my cash? I want choice. But equally, maybe the merchant wants choice. Maybe the merchant says, you know, if you pay with a debit card, do I want to put it down a debit card rail? Can I have the option to put it down, let's just say, an open banking rail? Because that rail is cheaper and available, etc. And so competition on payment types, competition on from a consumer's perspective, from a merchant's perspective, but also from a bank's perspective. And then also on providers, right? Yeah, the many network providers, many payment service providers providing card, acquiring, account-to-account payments, competition at that level. And dare I say, as you're seeing in in some nations, competition between network operators. So competition takes a different spin in payments, and I think that's a good, healthy thing. Some people think, well, I don't want competition, I just want to do my thing and sell my thing and do whatever. But I think competition, as we've seen, drives innovation, drives invention, and having more competition across the whole payment stack in every angle is a good thing. These driving forces are posing big questions, particularly to the national infrastructure, whoever is providing it, and say, what's the national infrastructure doing for the nation to enable a further adoption of further pace change in this fourth industrial revolution. So within that context, within that setting, within that understanding, what could a future payments infrastructure look like? So I've got an answer, but I'll give you the ingredients. Right? I'll frame this as the ingredients. So I think when banks, whether you're a bank, whether you're a payment service provider, whether you're a national infrastructure provider, the way to think about the future of payments infrastructure is with this analogy. Today, the analogy between copper that provides your internet connection, your broadband connection, or the use of fiber. I think we've all been comfortable. We all now need internet connection. The pandemic has proved that. Nations that went heavy and invested heavy on fiber before the pandemic, well, they saw the benefit of it during the pandemic particularly. But think of infrastructure as, with that analogy, going from copper to fiber. So what does the fiber, using the fiber analogy, what does it mean for payments infrastructure? What are the ingredients? First one is microservices. I'm not a technologist, right? I can spell microservices. Dare I say I've never written one over an API. But the point being around microservices is gone are the days, like I said, technologies are available, gone are the days of having to write monolithic applications. Monolith applications that sit there, do a particular thing, and only expected to do that particular thing and that only thing for the next 20, 30 years. Gone are those days. And if you need to change it, it gets very expensive, it's very hard, probably written in a code base where there aren't enough knowledge on the planet today who understand that code base. So using microservices and the principles of microservices and microservices architecture to design your next applications is a very key ingredient. And so with microservices, you can spin up new services, you can amend existing services, and you can cancel services without significant time and budget demands. I'm not going to talk about ISO. I treat that as the communication format of choice. The whole world's going there. New Zealand is going there. It has to be baked into every single application at some point in time. If it isn't already, it needs to be. But also presents the biggest opportunity around, well, instead of just rewriting your application to deal with ISO and building translators, really do take the opportunity to say, how can I rewrite, should I rewrite my application to be ISO 222 native? The third one is cloud, and just, I'm not paid by any cloud provider, I don't have any partnerships, I'm not reselling any of their stuff. But the point about cloud here in the context of payments infrastructure is, what's really important in payments is scale, being able to go from 10 TPS, transactions per second, to a world where you can do 10,000 TPS, to maybe in a world where, you know, if cash gets digitized, you may need to deal with 1 million TPS. And so really puts a big strain, not just on your application, but also a big strain on your hardware. And cloud can actually give you some very credible, solid solutions now around scaling, around availability, being on available 24/7, 365, around recovery with cloud and I guess other hardware, but particularly cloud. We've seen you can get your recovery down to sub-minutes and not hours and days and weeks and months. And so building applications, your next infrastructure on a cloud just makes a lot of sense. And if you don't like those buzzwords, TCO, there you go. Everyone likes a cheaper price, and I think you can get that with cloud. Open platform. Open banking's been talked a lot about in New Zealand. There seems to be more announcements, more strategies towards that coming. As we've seen that topic, and this topic around openness is a trend across the globe. And it's whether you call it open banking, open finance, for me it's about collaboration. Open up your system so you can collaborate with partners, suppliers, and even in some instances, competitors where you want to combine your capabilities together to tackle a particular opportunity. So building platforms with openness in mind, so you can take someone else's API and services and embed it into your services, becomes critical. If anything alone, the interoperability part becomes very important around the open platform piece. Extendable architecture. So this is an observation when speaking to various central banks around the world and then the market participants in that nation. It's typically around a 2 to 3 year view. Now, I argue, I don't know what happened in the last 10 years or so, but when I started in my consulting career, when you do corporate strategy work, you have a 10-year, 15-year view, and you work and make decisions against that 10 to 15-year view. With that in mind, you've got to think, well, is my application, is it extendable? Can I add to it? Can I change it? Can I modify it? Can I have the nimbleness to meet whatever the 10-year, 15-year strategy may bring or may not bring? So having applications and infrastructure that is extendable to deal with any business economic scenario, very important. And the last one is around agility. And this is not just agility in your software or any hardware, it's an agility in your culture and in your workforce, able to quickly respond to a situation. COVID being a good example. And a lot of commerce going online, and systems needed to be online, be able to deal with a lot more traffic. Having agility built in your DNA, if it's not already there, becomes super important. So with that in mind, they're the ingredients for me that need to be considered. I think if you miss any one of those, you're going to have a half-baked cake and you're going to struggle in the future. I think all 6 of those are critical to create infrastructure for the future, the fiber optic of the future for your nation. We just don't do that for no reason, right? I mean, all of these ingredients have got to lead to something. Most nations, my business in central infrastructure, we are helping nations to become digital-first, real-time economies. And so the outcomes that this infrastructure has got to deliver is a number of things. One is user delight. You got to meet your consumers' needs of today, needs of tomorrow. Got to increase your competitiveness. In some areas, some of these infrastructure designs can actually create your competitive moat, and now you compete more. Lower TCO, well, it goes without saying, producing revenue at unlimited cost is just not going to fly in the future. Trust has been talked about a lot today. I'm not going to talk about it anymore, but it actually becomes more number one. Scalable and resilient, well, what we've seen in recent times that the systems have to be up and running. Who knows whether the fallouts could happen geopolitically, and we've got to be, nations and market participants in the nations got to be able to deal with those situations. And then ultimately, and this is the kind of catch-all, all of this is good, but it doesn't lead to domestic economic growth, where GDP is the main metric. If all of this doesn't add to GDP in some way, shape, or form, then it's kind of like, well, what's the point, right? And it's really grounding down the theory and the talk and the passion around payments into reality. If this is not yielding more revenues, more tax receipts, achieving the national agenda around domestic competitiveness as well as international competitiveness, then it's like, kind of, what's the point, right? So on that note, I've got a couple of minutes left. So there wasn't going to be no answer. I'm going to give you the ingredients to the answer, so hopefully I'll achieve that for you. So say thank you for the time, and open up to any questions.